Okay, welcome everybody to this evening's AUDJPY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review. So let's get into that. Before we do, if everybody can read through the disclaimer. For those on our YouTube live stream, I cannot see your chat. You're more than welcome to watch there, or you can join us in the webinar by following the link that I've given you there in the chat. For those in the webinar, if you have a question, you can use the chat box or the Q&A box. I've got both open. So please, everybody, just take the time to read through the disclaimer. Ricardo, hey, hello to you. How are you? All right, now, for those that don't know me, my name is Duncan Cooper. I'm Senior Market Strategist and Trading Mentor at AUDJPY Securities, and I'm a full-time Forex trader. I've been trading it almost 20 years in the Forex market, mentioned for more than 10. If you want to contact me about the webinars, then my email's on screen, duncan.cooper@acy.com. And through the week, you can connect with me at our website, acy.com, go to the Market News tab, or at our YouTube channel at AUDJPY Securities Australia is the handle. And if you want to connect with me personally, my Linktree page with my links connecting with me can be found there. If you want to get access to the charts I'm using for MT4, just contact Nathan.bray. His email's on screen. I'll put that in the chat for everybody. Here we go. All right, so let's get into the news items for the day. Talk about the FOMC statement yesterday. So, of course, we've had the FOMC statement early in the morning. And they actually did a 50 basis point cut rather than 25. It's a bit difficult to work out exactly what the market's doing at the moment. The market rushed up after that, then it sold off, and now it's moving back up. So our pair's coming back up versus the US dollar for a rally, because we definitely got a substantial sell-off post press conference. So, you know, you don't have to trade today. You can wait for a good 24 hours maybe, just let the market settle itself down. But you need to be able to see a setup that you like. So, and you don't want to be buying too high if we're in an uptrend, or you don't want to be selling too low if we're in a downtrend. So we just have to make sure you have a setup that you're looking for that makes all good sense. Now, getting in today, 9 p.m. for the pound, we have monetary policy summary, MPC official bank rate votes, official bank rates. Not expecting a change there. We'll have to wait and see. I mean, inflation is 2.2% in the UK, way lower than the US. So you would think that we would maybe get a cut, but because the US and the UK are at the same levels in interest rates now. All right, 10:30 p.m. got US unemployment claims. These times are my time, Queensland, New South Wales time. Getting into tomorrow, we have the BOJ policy rate statements, conference, press conference. This is usually 1:30 my time, 1:30 New South Wales time. In the afternoon for the pound, 4 p.m. retail sales. In the evening, Canadian Governor Mackin speaks, and then we've got Canadian retail sales, core retail sales at 10:30 p.m. All right, so going to be very volatile for the yen crosses tomorrow, so difficult really trading those ahead of then, unless you can just see an intraday trade that you can get in and out of. But the yen pairs are definitely moving up. Pairs to yen moving up, so we may have put in a bottom on those pairs at the moment. So let's get in and just assess the levels, see what we can see in the charts following the FOMC this morning. Now the dollar index, forgetting what price is doing right now, we had a massive rejection of, there on the day chart, of the monthly level here. Now we're just 5 points back below it at the moment. So this is why I said, trading today, big reversal yesterday, we're a bit back below it today. There's a bit of an uncertainty about which way the market wants to push things, because we did get quite a reversal yesterday. So there's a day chart. It'll be interesting to see if we drop to the 4-hour chart, this big rejection up here, where price comes back down to. We're just at the 62, just below. There is a little bit of maybe a left shoulder inverted head. Do we form some kind of right shoulder here? Do we once more close back above 100.30 today? All right, so I don't know. I'm a little bit unsure because we had such a reversal yesterday, and now we're starting to head back down. So I would like to see where we close today. And I might say the same thing with the other pairs at the moment. Where did we close today? Or intraday, do we start to see a 4-hour reversal back up from this area of support down here at 100.20? All right, so watching to see how that sits today. All right. All right, now the S&P 500 did reject yesterday at the all-time high, but today we're moving above. So it looks like until we get into the full flow of the market, because the full flow of the market doesn't start till, what is it, 9:30 New York time, I think, 9:30 for the stock market. Obviously, when the main volume of the market comes in to see if we can clear that high. So if you want to be a buyer, you know, for me, I'd want to see at the moment this completely cleared away. And then later next week, does the market offer a pullback for this to be supported? 56.69 is the level. Now, of course, we could see a false break like we've had yesterday and the day before, 2 rejection candles. False broke yesterday, the day before we didn't quite get there, we just rejected this area. So if we reject today once more, so we have 3 rejection candles in a row by the end of the day, then we could be seeing a reversal. You know, but we're very high up just to be a buyer at the moment. And we can drop it to the 4-hour chart. Even if we false break the top here at the moment, you could just monitor the 4-hour range and look for a pullback to the 62.79% area and look to buy a dip. You know, I'm not going to buy at the top of a move, so I would need to buy a dip if I wanted to buy. But ideally, I'd like to see this high totally cleared above, and that old high becomes major support for a further move up. Fed's come out and said that they're going to cut maybe twice more this year, 4 times next year, 2 times in 2026. Can't really hold them to 4 next year and 2 the year after. We might get another 2 this year, though, because if the data changes, then, of course, all that long-term forward guidance is going to change. But the market's assessing all those cuts to be true. That's generally positive for the stock market. So that's why I'm saying, can we clearly move above this area now and then pull back for that to be a key area of support over the next maybe week? All right, euro dollar. Here's a day chart. Big rejection yesterday. We've actually had a day down, and now we're coming back up inside the rejection candle. We couldn't quite get up to 112. I think today I'm just sitting tight, waiting to see how high we can get up. Do we start to stall at the top of yesterday? Can we get up to 112? All right. Interest rate from a differential point of view favors the US side of the euro dollar. All right. Even with the rate cut yesterday, quite clearly. So I would be watching up here at the top to see whether we come up once more and hold. It's too high up at the moment to be a buyer. If you want to be a buyer, you should be buying earlier in the day, closer to the low of the day. So this is a lower bottom on the 4-hour. Is it going to come up? Are you going to see a rejection candle up here? It'd be nice if we saw a rejection candle and close back below 11.55. Then I could start to maybe think about taking a short. Other than that, I would be watching up to see what happens up here at yesterday's high to the 12.01 high. What happens up here? Do we fail? Ultimately, market may be reacting now. I want it to be on a bullish bias, but we'll have to see an appropriate setup to buy. I'm not going to buy at the top of this move. I would need to see at least some go at price breaking above here. and then offering a pullback, and then look to buy the dip on the pullback. We don't have that at the moment. We may be having a rally here to get ready to short today after the intensive sell-off yesterday. So not easy on these pairs, because you don't want to be buying at the top of the move. If you weren't getting long earlier in the day, we could be at the top of the day on these pairs. So you could be monitoring on the 15-minute chart at the moment. If we are coming up for a rally, there's the high yesterday down to the low of today. You could be watching to see if we can start to move back below the 79% level here, and then can you see a shorting setup? All right, other than that, do you want to be buying at the top of today's move? We've already more than done the average 5-day range as well, so it's not ideal to be a buyer up here. Maybe it might show its hand for a short later in the day. Euro yen, with the bodge coming out tomorrow, if you go to the weekly chart, starting to put in maybe a higher bottom here to this bottom, and we have this inverse weekly head and shoulder pattern down here. So, and it's an outside week as well this week, so it's looking rather bullish as we look at that weekly chart. Back below the 79% level of the monthly range here, which is still in an uptrend. So, you know, well, fourth positive day up, it would be nice to buy a dip. If you want to get long, can we buy a dip? Now, tomorrow, there's an area of broken resistance to be support over here. When the bodge comes out tomorrow, the fact that we've now broken above this area and there's a 79% level there, that's the monthly 79% of the range. It would be nice to see some volatility, and this would be a great area to look for a dip down at 158.07 to 157.95. I think the number is there. At the moment, we're getting very close to resistance at 160.01. So very high up in the most immediate run here at the moment. So traders could most definitely look at 160.01 for an opportunity short today. If we looked at this range, just go back to the daily, this range here, depending on your mode of operation, whilst we're having a move up this week, of that range that's been formed, 62 level overlaps with 160.01. So that might offer a good level to short at. All right, I'm starting to favor more to the upside. I just don't want to be buying at the top of the move, but there is that range to the downside in form. You could most definitely watch 160.01 for a high to come in today. And then, you know, that could reverse back down to 158.07 and be the area of support to be a buyer. Okay, so at the moment, it's moving into the 15. It's going up, and you know, if you want to be a buyer, you don't want to buy the top of the move. So could most definitely watch up here for a reversal if it comes around. But I feel like past the yen are much more bullish. It'd be a lot more prudent, I think, to try to buy a dip as and when a dip comes along. All right, euro pound. Softening, still very much sideways. I would leave the euro pound alone at the moment. It's just quite horrible. But it's moved from being an uptrend at the start of the week, now breaking below this low, to being a downtrend. But there's all this weekly support down here. So I'm not going to sell into support. So for me, something nice needs to happen on the euro pound. It needs to break out somewhere, start to show a nice trend, and then I think look for, you know, an appropriate trade. At the moment, because of all the support here on the weekly chart, there's a high chance that if we do come back down to 83.97 to, I would say, 8400, that could be support once more, and we could simply bounce back up and still stay in this very consolidatory mode. So I then you should be just, if you have to trade this, watch where support is. It's at 83.97 to this low here, 8400. Watch that to be support on a lower time frame. Does it turn around down there, and can you get long? I don't want to sell into support, and maybe over the next 2 or 3 trading days we can break below quite clearly 83.97, and then you can look for that to be resistance, to be a sell level to trade down from them. But at the moment, that's really the buy zone. Okay. Right, pound dollar's got its interest rate decision coming out, and after a massive decline post interest rate decision and press conference, we're running all the way back up, just back above. Massive rejection yesterday, but we're obviously up today. So have we rejected and the buyers are still holding up long term? That's why I'm saying, I might need a couple of days to just see how the market absorbs, that rejection yesterday, interest rate decision today. From a buyer's perspective, do you want to be buying just above that high? I don't think so. We can see what the trend is. The trend is up. So I'd need to see a dip in some form or fashion to be a buyer. And from a short perspective, quite clearly yesterday, 132.65, whilst we traded almost up to 133, it was very heavy. It actually rejected both of those high points here. So let's take that fib off. It's not telling me anything. On weekly charts, we're in an uptrend. We have a high over here to the left, 132.98, which we pretty much hit yesterday. So that weekly high there is holding the market on 32.98. All right. Not to say that we're not going to be moving above there long term. I just don't want to be buying at the top of the move. Now, heavy rejection yesterday, there most definitely could be the option here that the market rejects here once more today. Might want to come up to the high yesterday and hold. So 4-hour chart, you can see it moving up. It has actually swings here on this particular pair. Didn't put in a lower bottom here, it's a higher bottom. So if we map out fib till from that level, where we might move up to today, with that 4-hour uptrend that I can map out there, this is down here at the 79% level. As it started to reverse back above 79% here, was the area to get long. Now it's getting into the profit-taking phase of coming back up to challenge the high, and the 127 extension most definitely is a profit-taking area at 133.38. So we may see that map out, but we're very high up now to be a buyer. It's time to take your profits and then wait for potentially then the next dip, and then look to buy to move up. Okay, so it's not out of the question today that if we see a rejection up here today, that we can't reverse back below this weekly high here. So the weekly high at 132.66 is a key level to watch. It's last month's high as well. Definitely rejected it yesterday. What do we do today? If we reject it today again, that could stack weight to seeing a reversal back down the range. All right. So there's no argument where the trend is, though. There it is actually up. Heavy rejection yesterday. What is it going to do on a retest of yesterday's high and that weekly area of resistance? So we could, like I was showing in the Eurodollar, because the Eurodollar is moving. Let's just go back to the Eurodollar. From the 4-hour chart perspective, the Eurodollar is moving up from a lower bottom here. So this could be coming up to put in a lower top, where it's slightly different on the pound dollar. But if the Eurodollar halts and starts to reverse, we could see the same thing. We moved down. Yes, we didn't put in a lower bottom, but you know, if we, after the interest rate decision, start to want to 79% level overlaps with the weekly high at 132.66. So if we do start to come back below here, we may see that sort of price action come around. But at the moment, you can see it's still carrying up. All right, so too hard to buy, and we're not seeing a reason to sell at the moment. A buyers could today see a pullback just to this area and then trade up, okay? All right, pound yen, it's moving up. Like we're saying on the euro yen, we have a weekly higher bottom coming in here, forming at the 79% retracement area of the monthly range here. So to me, it's looking a bit bullish. Day chart, 4 positive days up here. There's still this range here that one could say is, you know, we could, within this range, come up to move down. We won't know until the bodge does its thing tomorrow, but to me, these yen pairs are looking quite bullish reversal this week. So after 4 days up, I would like to see, I'm going to sit past the bodge tomorrow. I would like to see a pullback. And 186.75, I just need to know where I'm getting that level from. It's an old monthly area here, old monthly high, 186.75. Can we move back down to retest that for support? 186.75 here. So tomorrow I would watch 186.75. Does any volatility bring it down to here to hold? And then look for an opportunity to trade up. There's a minor lower top here on the day chart as well. So old resistance would be support for then the next move up. So I don't know where price will be come the end of today and where it will be at the bodge, but I'm just looking at levels that I'd like to be a trader at or around if we can have a pullback, because I don't want to buy at the top of a 4-day move. All right. So some of these pairs at the moment, I'm just having to wait for something to come together and form. I can quite clearly see where price is moving, but I don't want to be buying at the top of a day and the top of a 4-day move. Now, Aussie yen is going to be a similar story. It's coming up to an area of monthly resistance here at the moment. 97.66 and 98.43. Now, from a monthly perspective, it's rejecting from the 79 and now the 62 level. This week is putting in a higher bottom. So my commentary is going to be the same. Where is it sitting tomorrow? But 4 days positive. Again, I'd need to see a dip. I really would like to be drawing a fib from this bottom up and over the next few trading days, monitoring to see if we get, I'm just going to put that to the high of the day, but keep dragging it up as price moves up and look for maybe the opportunity for this to come back to a 62.79% retracement. For the next move up. All right. It's always a time to buy or sell. It's not a time to buy right now. Look for the next bottom to form for the next leg up. Now, of course, what I'm saying on the yen pairs at the moment, we don't know what the bodge is going to report tomorrow. The bodge may come out and it's all positive and maybe they want to raise their interest rates. Well, that might then put this uptrend that we're seeing on the yen pairs completely, you know, on the sidelines, because then we may well have a complete reversal. But at the moment, this week, we're definitely seeing strength. All right, so Aussie has gotten very strong today with, let's just go back to the news page, we had the Aussie unemployment figures came out very positive and sent it above the 68 level now, and actually to a fresh high for the move in the current year. To the daily. I'm surprised that we've moved above so high, but we are, because 68 has been very difficult for the pair. And I've been saying this for a good 2 or 3 months. This is last year's price action over here, where we really struggled. This was around about the 68 level. We managed to get up maybe to just short of 67 in this area. When we came back up here, it was a fraction shorter. And then when we failed here, it was pretty much at this area over here again. So whilst we're looking very positive today, we're definitely in a strong resistance area, okay, that the market has not liked last year. So it's going to be interesting. So what I'm trying to get across here is we're in a sell area at the moment. So I'm just going to leave that fib on there so I can reference that high point. We're coming quite clearly into sell area. So don't be surprised if we move back below 68, because 68 was very difficult last year until something shifts. Maybe we want to move above 69. We can't move above 69. I think there's a high chance that we're going to move back below 68 because it was a very heavy area last year. So whilst we're very positive today, okay, yesterday we rejected. It's the job figures of the market from Australia is giving this some positivity at the moment, and the fact the S&P 500 is getting above its all-time high. But if we see some rejection on the S&P 500, it would not surprise me to see this back below 68. So I would certainly be watching up here at 68.71. That's the next high. That's the December high before we came all the way down to here. So I will just be sitting on my hands at the moment. Now, if you're way more bullish, you could be monitoring the range of today. On the 4-hour chart. And looking for the next pullback to occur. Keep dragging the fib up. And if you want to be a buyer, you don't want to be buying at the top of the move. You want to be buying on a dip. And if you're bullish long term, you want to see this move up. And ideally, it would be great if a 62% level overlap with 67.98. We'd have to go above this high over here for that to occur. So I don't know if the fib can help us in any way. But really, the buying level is 67.98 for the buyers at the moment. If it pulls back, if we're going to keep moving higher, the buyers would need to defend 67.98. So that would be the level for the buyers to take control at, to keep us above an area now, long term. And if we move back below 67.98, that looks like we would be, moving back below. Back down the range again, like we did yesterday. Now, last month's high, another reference point is at 68.23 level here. Whilst we're trading approximately 10 pips above here at the moment, it's just 10 pips. This is just an area of liquidity here at the moment. Buyers are having sellers are having their buy stops tripped if they have them sitting just above here. So that's why price is moving up. And some retailers are thinking, oh, we're above the high, so we must be going way higher now, so I'm getting long. All right, so there's definitely retail traders buying above there. The question will be, is it, though, an area of liquidity for institutional traders to absorb all that? So, as the day moves on today, Do we see a 4-hour candle want to close back below there? All right. We've more than done the normal range for the day. We've almost done twice the range for the day. We are way overstretched. I don't want to be buying up here. I could actually entertain a short today if we started to break back below 68.23. So I'd just be monitoring to see if this can start to break down. May not break down at all. It may only break down below 68.23 and come back down to 67.98. But at least if it does that and you get short, you can at least get your risk out. And then you can see whether the market is remaining bullish at 67.98 and maybe you just end up with a break-even trade. Or maybe you're bullish and you just want to wait for 67.98 for a pullback there and then look in this area for a buy. All right. So two sides of the market. We're very high up in the sell zone. Doesn't mean to say that the market may have just flipped its whole mentality and doesn't care now that we're in a sell zone and it wants to plow straight through it, head up towards 70 maybe. But we're going to need to see at some point over the next 1, 2, 3 trading days that 68 down to 67.98 becomes a clear level of support, because if it doesn't, we'll move back down the range. All right. New Zealand yen. Again, 4 days up. It's having on the monthly chart 79% rejection of the monthly range. Weekly chart. It's gotten support at 86.30, which is, just trying to remember where I get 86.30 from. It must be a daily level. Well, it's just a daily level of a little double bottom down here, 86.30. It's 4 days up. I just think at the moment, some of these other lines I can take off from. There's my monthly. I want to go on my monthly levels. All right, there's a weekly level there that we need to surpass. And this is a daily level support down there. That will suffice. All right, so if we are bullish, we don't want to be getting long into 89.94 because that's a weekly level of broken supports. That level could be resistance. So be aware of that. With this 4-day bullish environment, like I've been saying on the Aussie yen, it will be just great if we now can pull back, put in a higher bottom, look to the 62.79% area. See if that comes around tomorrow with the bodge. If the market keeps moving up, keep dragging your fib up. Have we put a bottom in on these yen pairs is the big question with this reversal this week. And if we have, want to be looking to try and buy a dip over the next few trading days. New Zealand dollar. So heavy rejection yesterday. It actually closed back below these 2 double top areas. At the moment, it's trying to move above this daily high. It's trying to maybe change the day trend up here at the moment. But there's a 79%, there's 2 79% levels here from the range. Go to the weekly chart. This range, 79% level, is exactly where we're at. And a 79% level of this range. So I will just watch today to see if we start to want to move back below 62.54. Because this could be a great level to get short at. Over to the left, I always like to look at what price action did over to the left. What happened what did price do where we're at right now? Previously, we had this consolidation area. That's really where, after topping out up here, we consolidated to break below this area, came back to that area. All right, so we're back into this consolidation area here. All right, wouldn't surprise me that we could hold here to move back down. All right. So I would just be watching. We rejected it heavily yesterday. I would just wait to see as the day progresses, do we start to want to get back below 62.54? I'm not going to go long here. So I'm either doing nothing or I could look for a reversal. From a long perspective, we're going way, much higher now because of the US interest rate cut. I would need to see price action come up, then pull back, put in a higher bottom, and come up. Now, I don't have that at the moment. So I'm not going to buy at top of a move. I want to be buying after the dip's kind of put in. So until then, I have two modes. I can do nothing, or I could look for the market to show its hand maybe for a short. It's not showing that at the moment. I've got a 4-hour rejection candle here over the next 4 hours. This candle here it's got another 3 hours to go. Well, another 3.5 hours to go yet. So over the next 3.5 hours, as we test the high of the FMC, do we start to reject? Do we start to move back below 32.54? Dollar Canadian, it's been up and down. So what is it doing? Did come just into this imbalance on the day chart just. So the day chart here, it's looking rather negative. From my perspective, I'm going to draw the trend. I would still class this as up at the moment because of bottom, higher top, and then we progressed up to that top. So I actually look at the range to be there at the moment. It's a bit messy in here. So I would look, that was very bullish, this candle here from the 62 level. And this is the major monthly ranges here, low to high. Lots of buying pressure from the 62 level. I'll look at this range at the moment, see how price operates within that range. Now, where are we at within that range? We're at the 62 level. And it's testing the low of, it's at the lower yesterday. So it may want to come actually down. See this candle formed an imbalance in here. So maybe we want to come in to fill this imbalance here, which it almost has done. So the bottom of the imbalance is at 35.24. And we've actually been above last week's high, below last week's low now. We've been back below last week's low twice. So this last week's low here at 135.46 today. If we start to come back above 135, let's say level is 135.46, we can see this come all the way back up. This is way overextended. Got way overextended that way yesterday as it moved up, and now it's way overextended to the downside. So it's going to be interesting today when the US market comes around, because at the end of the US market yesterday, pairs to the US dollar were heavily selling off. This was moving up. So what will they have the same kind of thought process that they want to sell the US dollar? So we could see this come up today. If it's on the 50-minute chart, if it started to move up, started to put a higher bottom in, breaks above a high like so, then we could see this come all the way back up the range. All right. This being so low today, you don't want to be selling down here in any event. So you may see the opportunity to trade back up the range here. You just have to wait for price action to start to form that. So already coming back above the spike down low of yesterday. All right. So This is obviously at the low of yesterday. Pairs such as the euro dollar, it's trying to come up to the high yesterday. It's not quite getting there. So this is obviously not as strong. And the pound hasn't got to the high of yesterday either. So if we start to see the pound and the euro curtail to the downside, I'm sure we'll see the dollar CAD starting to move back up from the low of yesterday. All right, dollar franc. So it's actually done what I said on Tuesday. It did come into the 6279% area down here and it's rejected. And of course, it's rejecting up here. And really, if we look at price action here, it's slightly, from a swing perspective, it's bullish, but it's very range bound because it has moved up to a higher top. That's potentially a higher bottom. You could maybe say that's a little head and shoulder pattern here. But ultimately, price action is very sideways in through here. It's not great at all. But are we putting in maybe a higher bottom here, down here? And we might come back down today to retest the weekly support area, 84.32. So that would remain the key area of support at the moment, 84.32. If we retest, do we hold there on a lower time frame intraday for potentially support to hold to move back up the range here? On the 15-minute, this move, I just want to go back to my daily, just take that fib off for a moment. I want to put a fib across the range that's been forming from yesterday. So just the 15. Take that off. So down, 84.32 is weekly support. Got 62 level at 84.37. I would watch that area for support today. Okay, dollar yen. So monthly supports, we trade just underneath it, but are we creating maybe a long-term double bottom here? Weekly charts had a week down, now a week up. Reversal. And we rejected 140.24. That candle pretty much sat on top of it. Yesterday, we came all the way down just short. So quite clearly the buyers are watching that level there. Now, it's holding at resistance up here at the moment, but it's taken out a minor day chart swing top here. For me, it was kind of moving down to there, swung up to there, swung down, swung up to there at the moment. Okay, change the trend to up. So you want to look for the next dip to form the day chart first of all. That may come tomorrow. Price may well once more come down to challenge 140.24 tomorrow when the bodge does its thing. If we spike down there tomorrow, assuming we don't put a fresher high in today, fib stays where it is, 140.50 down to 140.24. Certainly watch that area tomorrow because the volatility of the bodge decision spikes price down there, and then it doesn't matter if it goes below, but if it starts to want to hold back above 140.24 tomorrow, that's a buying level for sure. We've been getting support there all week. So unless the market withdraws support, we could spike down there, and that could be a great buying level. And, there's a number of imbalances on this move down that may want to be filled. Little one in there. There's one in here. All right, let's just put the other one in. Little one in here. And then we move down to there. Some of that's been filled. All right, so there's a number of imbalances to the upside that maybe the market needs to come up to now to fill. And we're quite clearly not wanting to commit. We can't close below 140.24. So if we trade below there yesterday, you can still watch to see if we, by the end of the day or the next few trading days, do we once more come back above? Because if we come back above, to me, that gives you maybe the window of opportunity to get long to see if we can start to move all the way back up this range. All right. But I would give you a caveat, no dangerous trading the yen pairs till we get past the bodge news tomorrow, for sure. All right, let's just finish on gold. Gold's continually moving up. Did give you a nasty rejection yesterday. It's trying to come up like the pairs to the US dollar, close to the high of yesterday. Personally, I want to be a buyer on gold because the trend is up. I will still wait to see if it's going to be friendly and come back to the key area of support at 25.31. So can we get a move down to this area? And then do we start to see it hold intraday? All right. Do you want to buy gold at the all-time high? I don't. So lots of these instruments or pairs at the moment, they're at tops of their days. Some of the pairs are at the tops of the moves at the moment. So, if you haven't got bought further down, it's very difficult to be getting long at the tops of the moves. So you just have to be patient. If you're patient, you can see here patience came in on gold a couple of weeks ago when this level continually got, price moved above, came back to support a number of times here for then the breakout. So if you're patient, this potentially will come back now to the next level of support for then another break. We just have to be patient, wait for the setup. All right, so I'll leave you with those thoughts on the market at the moment. Not easy with such a dramatic interest rate change yesterday, and I think as well a dramatic change in policy. We'll have to wait and see how the market absorbs it over the next couple of trading days. All right, euro's still at the top of its move for its day, but it's not, it's getting very high up to the selling level there. Pound, just putting in a bit of a pause there at the moment. It's actually coming, if you look at the intraday, let's go to the 5-minute chart. It's back to where it started to top out yesterday. See these highs here? It's actually coming up to fill an imbalance. There's an imbalance here on this big red candle because it started up here. So really, I'll class the imbalance there. And then if you look left, where we were struggling, that's where we first spiked up after the interest rate decision. Tried to get above there and we couldn't. So then that's the real struggle area with that imbalance. And where are we holding at the moment? Over here. Exactly at the first 5-minute spike up. All right, so it's at the very high exhaustive area where traders, if you were buying up there yesterday and you were still long, wouldn't you be selling up there today going, oof, I can just get out, have the relief of not being wrong? All right. Or if you were wanting to sell up there but you were too nervous yesterday, wouldn't you want to sell up there today? So it'll be interesting to see how price navigates up there today. I can see a couple of reasons why the market could. I can see why the market is stalling there at the moment. But we'll have to wait and see what happens when the interest rate decision comes out later in the day. That's at 9 o'clock, so it's about an hour and 10 minutes away. All right. Let me just get rid of, I don't need those really. I just wanted to prove, just, show you why it's stopping there at the moment. I'm going to watch this today to see if it can move back below that 79% level and that weekly high there at 132.66. Maybe it can't, maybe it's just going to keep going up. But that's a true reference point to watch. That's last month's high over the next couple of trading days. Even if we trade up to 133 today, or if we go up to 133.20, over the next 24 hours, if we start to then move back below 133 and then we can't hold at 132.66 to be support, we'll move back down the range. So Just sitting on my hands at the moment, understanding where the levels are, knowing when we're too high up to buy. Even the trend, no, trend's up, but we're too high up to buy at the moment. So we'd at least need to see a dip first of all before being a buyer on these pairs. All right, I'll leave you with those thoughts. If you want to catch me next week, head over to our webinar page. There's the link at the top. And next webinar from me will be next Tuesday, more analysis, the 24th. We'll be going through trade orders and execution, how to understand orders, how do you put them into the market on 25th, Wednesday, and then Thursday, more analysis. Okay. So if you want to join me, then just head over to the webinar page and register your interest. Other than that, be careful at the moment. It's very volatile. You don't have to go and do something foolish and lose some money at the moment. You could wait for your appropriate setup. You know, maybe we're moving much higher, but you want to be buying a dip rather than buying the top of the move at the moment. So just wait for a setup. Something's going to set up over the next 5 trading days, and over the next week. Something, market will become a little bit steadier. We'll certainly see whether the market's going to continue up, or, you know, we're at the top at the moment and we need a decline. Maybe the market has already, you know, sold off the US dollar way too much into the interest rate decision, and we may see a rally. All right. Don't be surprised if you see a rally. All right, I'll leave it at that. Ricardo, thanks for your comments there. And everybody, I look forward to seeing you next time. Thanks, everybody.